All right, welcome to the second edition of the John McEntyre Show live. We are live today, um, and with me I have Andrea McEntyre, financial expert, and my wife. And due to a technical difficulty near the end yesterday, we're going to do a little repeat of what I was talking about before the end of the show yesterday. But today is an actual continuation of creating a firm, solid financial foundation. I've been practicing saying that 3 times, and I'll finally get it right one day. And so, it'll be a continuation of yesterday. And yesterday we talked about savings and having cash on hand in the foundation. And today we're going to actually talk about that insurance, protecting yourself in the different areas of insurance, right?
Reducing your risk. You're right.
Yep. Reducing the risk. And before we go to that clip, I wanted to mention we welcome your questions, your comments. You can do it by email or however you want to do it. DM us. You can, because we are broadcasting through Facebook Live, YouTube Live. So we're on those social media platforms right now. So you can actually put a question or a comment in the chat. And if you do ask a question through the chat in the chat room, put a Q by it. Or if it's a comment, put a C by it. And that way we'll know that it's actually a question coming across and we can take care of it. We'll do our best to answer those questions as we move forward here. And one other thing I also want from you, I want wallet wins. Hashtag wallet wins. Just go in and put in hashtag wallet wins and share what a wallet win that you have. And Andre, we was talking about this before we started airing. What is a wallet win for people?
So a wallet win, there's several examples of this, but they're going to be different for each person. And there is no specific right way to do it other than you're making progress. So one example is someone who has never had a savings account and
Uh-huh.
they actually start their savings account. And within that savings account, not only did they save money, they started working towards a specific goal, and then they began earning more money um, for that money that was being set aside. So they're earning interest on that. So they felt accomplished in one, they finally got started. Number two, they were able to see progress. And then three, they really felt energized to now what's the next steps? I can do this. So it's building your confidence. Another example is paying off debt. So, so it could be opening up a savings account. It could be paying off debt. It could be now transitioning your part-time side hustle into a full-time business, or saving up enough money to where now you're able to take care of a bucket list item. So I hope those are a few examples, and they're going to look different from anybody. And we don't want you to think that yours has to look like a certain situation. It's a wallet win for you.
Right. That's exactly right. That's exactly right. You said it. It's actually a wallet win for you. So with that being said, we're going to get into the actual clip here. Um, excuse me. This is, like I say, a continuation of creating a solid financial foundation. And so we're going to run this show, and then when we come back, we're going to answer a question or two that we have received already. So enjoy the clip. For a secure financial future.
Protection, making sure that you have some type of protection in place.
Okay.
And when we say protection or risk management, we're looking at your insurances. So when you
Okay.
think about your protection and insurance, this could be from protecting your health. So
Mm-hmm.
this could be your medical insurance. This could be looking at your dental, your vision. This is all helping you as a human protect your
Okay.
life.
Right. Right.
Then there is another aspect, which is protecting your income. and that is disability. So that could be short-term or long-term disability, situations of an accident where you're temporarily having to do rehab and you're unable to do your day-to-day job. That's short-term. That could be anywhere between 30 days up to 3 to 6 months. Beyond 6 months, that's when we start looking at, is this a long-term disability that's impacting your income over a long period of time? So we've talked about protecting you as a human and your health. We've also talked about your protecting your income, which is disability. Now let's look at protecting your property. This could be your home, this could be your car, and then there is what's called an umbrella. The umbrella sits on top of all of that. So if anything happens, whether it's your home, accident where someone has an accident at your home or someone hits your vehicle on, let's say, uh, 85, your regular insurance has a level of protection. That umbrella goes beyond that type of protection. Then there's other levels of insurance depending on if you're a business owner and different protections you need. But that's what we mean by protection. Now, John, I mentioned over 5 types of insurance. Well, within each type of insurance, there's other levels. And the one that I did not mention was life insurance. So I talked about your health and your disability. Well, your life is looking at not only your situation today, if something happened yesterday, it's also helping protect your future. So if you have, I'll give you an example. If you have a young family and that family does not have kids yet, they have hopes, they have dreams. The family's earning, a fairly decent income. And if something was to happen to, let's say, one of the parents when they have a child, do their goals just go away? In most situations, people do not want those goals to go away. They don't want to eliminate college education funding or some type of educational funding for their kids. They don't want to eliminate paying off any type of debts or anything, because at the point that they pass away, they want their family to be able to grieve, to regroup, and think about what's next, as opposed to um, paying off bills, wondering if their dreams and goals with their family have now passed away with that person. So the reason why I gave that specific example is because your life is not just what you have today, it includes your future plans. So
Right,
you
exactly.
want to protect that income and protect those goals. And just the example that I gave you, that's generally 10 to 12 times what your income is, or to include your goals.
Okay, right. Because that I always tell the story. Of course, I don't name names, but it's quite common. Also, we've seen numerous of times where people, knowing them, very good people, uh, volunteer, go to church, they do they do it all, and then the main breadwinner passes suddenly, and the spouse, most of the time it's the wife, she can't grieve because she's trying to figure out how she's going to pay for a funeral, how she's going to do this, how she's going to take care of that. But the garage was full of all the latest toys, the big trucks, the cars, motorcycles, everything, you name it. But they didn't even have, proper insurance in place to, to have a funeral and to live life, like you were saying.
Yes, that's a sad but common
Hmm.
situation. And one piece of security, false sense of security, that a lot of people have as well is they may work for a company and they're doing quite well. They're early within their career, or even they're mid-career and thriving.
Right. Right.
They have group benefits. Those benefits are great.
Hmm.
It's helping take care of the day to day. It's been able to cover the braces or other things that has happened. Um, but if that same individual, that main breadwinner, passes away suddenly, they're only usually covered a small percentage of their income. Now
Right. That's
that
right.
person has passed away,
Mm-hmm.
they're losing all of their benefits. They're losing their health insurance coverage. They're losing their vision. They're all of that. That's part of medical is one component, but the other part is most of the family was likely covered with group insurance at a lower cost under that same breadwinner. So if they didn't have insurance outside of their group employer plan, then they're also probably underinsured, which it didn't take into account of all of their needs. And it
Mm-hmm.
certainly doesn't have anything in place to cover their future goals that the family unfortunately was unable to achieve before that person passed away as well.
That's right. You brought up an excellent point that most of the time when we look at financial situations, there's usually, when it comes to just life, let's just keep it there at life insurance. There's usually one of three. They either improperly insured, underinsured, and sometimes they just have no insurance, or the wrong insurance. And so that's a big one to really think about because, like you were saying, it gives you a false sense of security. You're working for a company that's providing all of your benefits, and we're just staying right here in the life part of it. The policy, it sounds good. They have a $200,000 life policy that the company is paying for. Suddenly, they pass away. We all know $200,000 in today's time, when you have that just to use for vacations or something like that, that's a good amount of money. But when it comes to covering living expenses, that's maybe what some with the average American 2.5 years, maybe.
Yes.
And that's with
Yes.
actually cutting some things out. Like, okay, we can't contribute to the child's college fund anymore. We can't take care of those things. That's just basic day-to-day living expenses, you know. And if the other spouse isn't working, then there you go. Who's going to take care of the home now that this spouse may have to go to work? Because while they were at home doing all, taking care of home, because we all know uh, house being a homemaker, it is the toughest job out there.
Absolutely.
Being
It's
a parent,
five to
yeah,
six jobs in one.
exactly. At least 5 or 6 jobs, and you're constantly going. You do the most work, you get the least amount of rest. And so
Mhm.
that's the most valuable person in the home, the homemaker. Okay, what if they pass away? So now you have to have insurance to cover everything that they were doing because you're still working. You're still having to work. So now you have to hire someone to come in and cover those 5 or 6 jobs. And
Mhm.
that's not cheap in today's time.
No, and depending on the age of the children,
Mm-hmm.
I've seen situations where, unfortunately, I mean, it does build character, but sometimes it does put children in a position where they're having to grow up much earlier because
Yeah.
they're taking on uh, partner responsibilities or taking on some of the duties that the family, the other parent was providing. And it's
Mm-hmm.
not to say that it doesn't teach them those skills. There's a difference between teaching someone skills and giving them responsibility and accountability, and now obligating them to this is now their job as
Mm-hmm.
opposed to
That's
this
right.
is their part of what they do for the family. Um, it is a it's an awakening, and it is a psychological shift because everyone's going through grieving. Many people don't think about that aspect, though. They don't think about when their children are taking on partner responsibilities and how that does um, not always result in a good relationship in the long term.
That's right. That's right. So just keeping it financial. I mean, like I say, a lot of times when people come to sit down to talk with us, first, that's one of the first areas because now everyone should just see, just in life insurance itself, how important it is to a secure financial future because things happen. And what insurance is not something that you use every day. It's what if. It's to cover the what if. Because what
Absolutely.
if, yes, what if you leave the house? Because just a case in point, what is it? Over 50% of car related, auto related deaths happen within a mile of the home. So your first mile leaving home, you have a very high chance of something bad really happening. And so most people, they don't think of it that way. Okay, they were just around the corner, something happened, someone, they passed away from this. Now the whole, the entire life is, just up in the air for a second until you can get a firm footing on what you need to do. And if you have life insurance in place, the correct amount and the correct insurance in place, then you will be able to take care of those things.
Absolutely. John, I want to spend a moment and just talk about um, three categories of life insurance that's
Okay.
important.
Mm-hmm.
Um, so when we talk about life insurance, uh, we mentioned people are at different stages and phases within their life,
Mm-hmm.
whether they are single and mature within their life and their financial journey, or they're married with or without kids, um, and there's also the situation of someone who's on the latter stage of their life as well. So I just want to talk about um, specific those stages and the different types of insurance. So there is what's called term insurance, and this is term is short for temporary, and term insurance can be used for a lot of good purposes. You have to know and understand what you're buying, why you're buying it, and have a plan, because it does have a time frame. So, for example, there's situations where a young family or any type of family or individual may purchase term insurance at a lower cost to cover a larger amount of insurance, and then they may, as their life changes, they may do what's called stacking, and they may start off initially with 250,000 or 500,000, and this is mainly that it would cover paying off all debts, and then it would provide a couple of, maybe a year or so of the income replacement. So we have that example. Well, as you mature within your life, your expenses go up. Most of the time, as your income goes up, your expenses goes up. So it will take more to replace your income and to cover debts in some cases. So you may add more insurance or stack, and there's some situations where you may then move into a different type of insurance, which is considered whole life or permanent type of insurance. And within that, you've got some that's a basic fixed savings rate, then there's an index, and there's variable. So you can really uh, tell that money how to grow in a different way within that permanent type of protection. Then there are situations where maybe you didn't plan as well, or the term insurance or other insurance that you originally had, something happened, a crisis or situation, and you didn't plan properly, and you now need more insurance. Well, that could be final expense. Okay, I didn't properly plan, or my other insurance has gotten too expensive, and I just want to make sure there's enough to cover my burial. I don't want my children or grandchildren to have to set up a GoFundMe account, or
Right.
to have any type of, sale or situation to cover um, the expense to bury me. So final expense insurance, this type of insurance can be appropriate for individuals who have a specific need, specific time frame. There's guaranteed, there's simplified. It can get really fancy and complicated, but the bottom line is you want something that will pay to have you buried. And
Right.
with guarantee, you're paying a fixed amount, so you don't have to have medical underwriting completed, so they're not grading you on your health. You just pay a fixed amount, you're guaranteed, and peace of mind, that's taken care of. So
Okay.
I know I covered term insurance, I covered permanent insurance and final expense. All of those are combinations that can be used individually and along the way. Group insurance falls under the category of term, it's just under a group plan with your employer.
Right. So I wanted to end it there because we were going in and talking about group insurance, and we'll do the continuation tomorrow with the rest of covering, protect yourself, because we cover the disability and the life. Those are two important. All insurances are important, Andrea, uh, but those two, that was enough for today. With the
Absolutely.
life stream.
Absolutely.
So
We went through a mini class on how to protect yourself and provide different types of risk umbrellas.
yeah, exactly. So um, as we promised, we were going to show a clip and cover the insurance. We actually had a very good question to come in. Someone contacted you and had a question. They were watching the show yesterday, and so we wanted to answer that question for them today. So, who asked the question and what do we have?
Yes, great. So an old friend of mine, Venus Sheffield, she actually asked a question that was related to savings, and we were talking about yesterday. We talked about emergency fund and savings and paying yourself first. And
Mm-hmm.
so Venus's question is related to when you're looking at options of paying yourself first.
Mm-hmm.
What are some options to consider? And she specifically asked if CDs are an option, and what are the pros and cons of looking at different types of CDs versus other type of savings options. And I did answer her question specifically through DM, but I wanted to bring that to everyone today because when you're looking at different types of savings options, whether it's regular savings and you're building up to a certain balance towards a goal, or before you go into and there's a balance or a specific amount that's required before you can earn a different interest rate, um, there's things to consider. So, first of all, I want to commend everyone who's thinking about how am I, is my money working for me? And let's talk about a couple of options. So, there are, most individuals have either a traditional bank or credit union relationship, or they may have a newer non traditional. Newer non traditional, this could be an institution that doesn't have a brick and mortar. So you may not be able to go to that particular office or location, but it doesn't limit how you access your money. It just means you can't drop by the branch or credit union. So, specifically to those options, just like there's different types of options that you can consider, if we look at savings, you can put this into a basic savings account, just like a basic checking. In these type of accounts, you're really not earning a lot of interest unless you have a different relationship with your bank or credit union. Relationships matter. We've talked many times about building out your team, and team members could be part of a bank or a credit union, or other partners that we'll talk about in the future. But if we look at the banking credit union, your basic everyday account may not be paying you much interest, anywhere between 0.05 up to maybe zero point 0.5, so not even a full percent on your balance. The higher your balance is and the longer your relationship, that actually allows you to earn more money. And earning more money could be better rates when you're getting a loan, or in this particular case, earn better rates as you're getting, let's say, a checking or savings account, money market, high interest savings, or a CD. So I've mentioned high interest savings account and CDs. There's also money market accounts. We're only going to focus on those that are FDIC insured. John, what I'd like to point out with FDIC insurance, this means that it's backed. That if that bank or credit union was to fail, that it is government backed or protected. So it has insurance. So there's insurance on your money that it'll pay. So if we're looking at each one of those, think about the purpose of these, and you're earning a higher interest rate. So there may be different flexibility and restrictions with each type of account. So with a high interest savings account and money market account, these may provide different amounts of interest that you'll earn. So your money's paying you. And then the other component of that is um, you have some control. Now, it doesn't mean that you can use it as frequently as your checking account, where you're using your ATM or your Apple Wallet or Android Wallet to pay for things. Um, so it may restrict how many transactions you can do per month. Then you have the other side, which is the CD. So this could be a short term, 3, 4, maybe even a 6 month. And then there's longer periods of time, a 1 year, a 3 year, 5, and there's even greater. With these, you're earning interest at a fixed rate, it's level. They all require a specific balance, but on the CD, there are more controls. You don't have as much access to the money. So I know I've covered a lot of different options, but I wanted to point out there are ways that you can get this covered. And I want to give a couple of resources for everyone. So, a couple of resources that are great for you to check out on a regular basis, as well as you can reach out to us. And that is bankrate.com. On there, they will have high interest rate money market, CDs, accounts, calculators, great tool and resource. Another one that I'm very fond of, which is also NerdWallet. These are sites that provide different tools. So if you're wanting to have multiple accounts for different SMART goals that you have, you may look at stacking them or having more than one options, just so you can have flexibility that if something came up, a true emergency, or it was time for you to take advantage of an opportunity, you would have different ways to access your money without being penalized, but also to give yourself some distance and control to protect yourself from not impulsive shopping on, let's say, some shoes or a new gadget. John?
Okay, yes, I can agree with that. That certain, um, for lack of a better term, financial products or options may not be suitable for certain people. For just the, just the example that you gave, that um, I'll use myself for instance. There used to be a time before I was much more disciplined. Uh, I always wanted to keep my shoe game tight. And so if I saw a nice pair of shoes, you knew me, I would get them, right? And I would justify it. But then it came a point in time to where I was like, okay, this shoe game is beginning to get out of control, and so there's much more important things in life. So we had to set things in place to protect us from me, to protect, protect the financial situation from me. And so I said that we chose you chose the actual financial product that we use to protect us from me. So I said that to say that sometimes a CD might be the right thing, for a certain person, for the simple fact of you can't just access the money when you want to, like you were saying earlier. A much more disciplined person like me now, it doesn't matter if the money's in the account. I see shoes, okay, yeah, I like them, but I don't need them. I'm good, so I don't really have to. We don't have to protect us from me anymore about when it comes to shoes. And that's a personal. It's a personal thing. That's why money is called personal finance, because your finances are personal, and you have to figure out what works best for you in your particular situation.
Absolutely. John, there's one last thing that I did want to mention, and that is as you have balances in any of your accounts, you want to monitor them from time to time. You went personal and mentioned protecting us from you, early John, younger John.
Mhm.
Um, I want to give an example of today, and that's related to Bella. So, Bella has worked part time, had her own little plant watering and dog walking type of business. Now she's older. She lifeguards and swim instructs. Um, and so she's earning more income. Her expenses are low, and right now she's our responsibility. And we're fortunate that she's very reasonable with her money and her ask. So we've got it good for right now. But needless to say, she's been earning her income paycheck, and it's just been stacking in her account. Other than $50 to $100 once a month or something like that. Um, we looked up and she was like, wow, um, my checking account is, I'm keeping over $500 in that. My savings is now up to 1,000. And we were like, okay, now what we need to do is make sure that your money's working harder for you. So we had
Let's
her
make sure
average what her expenses were.
we
And
want to. Uh-huh. I
then
wanted to
we
say,
looked and we were like, okay, how much interest is your money, is your savings account paying you? And she was like, well, what do you mean? It was like, to keep your money there, how much money is your balance earning you? And she was like, oh man, I'm not even earning 50 cents a month. And I was like, okay, so what we need to do is look at options that's going to allow you, based on your age and the type of account that you have, to earn as much money as possible. So I was doing some research and I came across a kid's savings account. Capital One has one, and it's earning 2.5% interest. That is what she earns on that money. So we quickly transferred the money over there. There is access. She's listed. She'll have control of it when she reaches of age. But if we need to transfer that into any of her checking accounts, we're able to do that. And she's not locked up as she would be if she was in, let's say, a CD. Now, with this particular account, she's not able to access it like you would do a regular checking. So that restriction is helpful, but if something came up, she would be able to access it, let's say for a down payment or towards a specific goal.
okay, well, that was a great example. I'm quite sure Bella's going to appreciate that you let the public know how much money she has in the bank. Um, and if she does, now I'll make sure and let her know that if someone calls, asking for a loan, we'll set up the terms. We'll put around 25-30% interest, compounding daily, and we.
Don't turn my daughter into a loan shark, please.
I mean, well, I'll have to protect the people from Bella. So she's not the one we need to worry. They're not the ones we need to worry about. We have to take care of her because she knows what to do when it comes to taking care of her money. You know,
Yes, you
her
said
money.
that exactly right. Her money. She's getting wiser each day.
Yeah.
And I'm glad I gave that example because it just helps us know that we all may need to refresh and look at updating our tools, our resources, and we're always happy to help others, because there's times when we all may need to refresh our education because there's other tools and resources. We don't have to use the traditional options that's always been out there. There are
Mhm.
some newer and sometimes more beneficial options that are available to us.
Right. Right. All right. So that was some great information. We hope you learned something today. And if you didn't, we'll be back tomorrow. If there was something specific you wanted to know, like I said, don't hesitate to give us to contact us. Um, Social media, by phone, by email. You can go to the website, johnmcintyre.com, and contact us through our website. And don't forget, share those wallet wins. Hashtag wallet wins. Make sure and share those because we want to know that you are taking the steps towards your financial security, and it's your financial security personal finance is personal, so you have to do what's best for you in your financial situation. So we want to know what those wallet wins are. If you open your first savings account, if you did opened up the your first checking account, the child's school college fund, whatever, whatever you did,
Pay
if
off
you
some debt.
right. If you pay off a credit card, that's a big win. Take that, that's how debt is paid off one step at a time. As they say, how do you eat an elephant? One bite at a time. That's how you take care of debt. That's how you save up money. That's how you build wealth. These things, they don't happen overnight, and it takes discipline. And so if you're showing discipline, if you sat down finally and did a budget, or you set an appointment with, professionals, and if you don't know who to talk to, contact us. We can help you with all of that. Those are wallet wins. If you said no to the shoes, you won with the wallet. So uh, we just want to make sure that we give you the information that you need so that you can build a safe, sound financial future. And so until tomorrow, we will be back the same time live. Our third episode will be tomorrow live. And don't forget that. So tune in, tell your friends, subscribe to our channels, like
Here,
our social media. Yes. And we will make sure and give you the information that you need to create a sound financial future. So until tomorrow, this is John and Andrea McEntyre signing off.